Look, we've analysed the US economy with rising interest rates already prompting big tech companies to shed workers. But what about China, now reopening from its tight COVID restrictions? If there's a lesson from Australia and the US, when people are released, it's that they will spend and travel when that's done. So let's bring in here Fred Newman, who is the Chief Asia Economist with HSBC. And Fred, is that the central proposition, that China's set for a post-COVID boom?
Well, certainly with the reopening of the Chinese economy, both domestically and internationally, you're going to get more travel, more demand for holidays, travel services, hospitality, and so forth. And that's going to give the economy itself a bit of a kick. And of course, it's going to radiate out to other economies across the region. If you think of economies like Hong Kong or Thailand, for example, really depend on those tourism dollars. So it's going to have this spillover effect. And we already see travel bookings up during the Lunar New Year currently, but the projections are that really we're going to get back to a normal travel season, if you will, by the second half of this year.
Yeah, there's been a lot of talk about when Chinese tourists return that's going to put pressure, downward pressure on airfares in particular, which have been one source of inflation. But in terms of this China recovery, is it good or bad for global inflation?
Well, it's going to actually boost global inflation a little bit because China's economy demands a lot of raw materials, more than 50%, for example, of iron ore, which is, of course, very important for the Australian economy. And that is going to mean that commodity prices will remain elevated and might even, in some categories, receive a bit of a bid. And that makes really the disinflation process across the world much, much harder. If you think about Europe and the US, certainly the European Central Bank, the Federal Reserve are looking for lower inflation to come through, but China is going to make that exit from monetary tightening much more complicated. Now, the good news is we have more growth, but we also got to live with the inflationary consequences for the rest of the world.
See, the one thing about this is many of the central banks are trying to get some sort of a soft landing so that if they do get into recession, it's going to be more of a shallow recession rather than something deeper. But if they're forced to go again harder to head off inflation that might be inspired by China's recovery, then quite clearly that gives the risk of a global recession, a deeper global recession, much more credence.
It is certainly a risk for economies where you have very high inflation, where the central bank's hands are essentially tied. And if you get that inflation surge from China, certainly complicates the job. But don't forget that China at least also delivers growth for the world economy. It does. It's the second largest economy in the world. It will help to support trade across the region. It will help to support growth among commodity exporters, for example, including in Australia. So it's not all negative necessarily, but the fallout will differ in terms of how exposed individual markets are to China's growth. Australia, for example, should benefit. Other economies across Asia should benefit. But if you sit in Europe, for example, if you sit in North America, the benefits are really not that clear cut. And you have to live potentially with higher interest rates and higher inflation as a result.
So, Fred, what's your central case? Does this avert a global recession or not the recovery in China as it reopens from its COVID lockdowns?
Well, the recovery is not going to cure all of our problems. We have many more structural issues across the world: high debt, still sticky inflation. We have central banks that will have a tough time delivering rate cuts this year. So by and large, it is positive that China's economy is recovering. At least there's one economy that's accelerating this year, and the global economy needs demand, and so that's a positive. But ultimately, it's not going to solve all our problems. And so it's going to be a bumpy year, particularly for developed markets across the world that's still struggling with high inflation.
But the one thing is that you can't have the Chinese community locked up forever. I think that's the reality of this. And what happens is not something that anybody globally or indeed in China can really avoid, because if consumers get out there and spend, that does have the impact on the supply chains. It has an impact on prices and therefore on inflation around the world.
That's right. And it's actually positive news that we have the Chinese spending again. And so really the recovery of China is it is helping to support the global economy that's now starting to sputter. So in that sense, actually having China reopen is still a net benefit for the global economy. It's just that in particular economies that are very sensitive to inflation, it's a bit of a double-edged sword. So net, I still see this as a positive for the global economy, but it is not the clear-cut positive for markets where inflation is very high right now.
I'll tell you what, Fred, we'll come back in the next couple of months and have another chat to you about this as this unfolds, because it really is going to be one of the big themes for 2023. And many thanks for your time today.
Thank you very much.
Fred Newman there, the Chief Asia Economist of HSBC.